That's Todd Rosenbluth from Vetify. He joins us here at the big board, TMX Vetify. Todd, thank you so much for joining us.
Pleasure to be here. Thanks.
There's been a lot of volatility in the markets recently, and obviously you pay attention to the flows as it relates to ETFs. When you think about what they look like now, what are the trends that you notice?
Well, so we had a record year for ETFs in 2024. We had a record year for ETFs in 2025, and it certainly seems like we're going to break a new record again. We've come out of the gate really strong the first 2+ months of the year. What really caught our eye at Vetify is that international equity ETFs have been gaining a lot of traction, and what we've seen is that investors came into the year underexposed to international equities using ETFs, and they missed out on some of the gains, and they're trying to catch up. So we've seen disproportionate share. You can see on the screen here, the second strongest month ever for international equity ETFs. We saw demand for developed international strategies, emerging market strategies, single country ETFs. We think investors are rediscovering international ETFs, and we think there's a number of products that they're perhaps not paying as much attention to.
What do you think about that shifting pattern, right? Investors, as you mentioned, have been underweight international for some time, and the international had been outperforming. But then you see gyrations like in South Korea, the Kospi having a big drawdown because of the weighting of, for instance, of Samsung and SK Hynix there. Are investors over-correcting? What's happening here?
So a lot of the money has gone into the more traditional market cap weighted ETFs. So iShares has a core MSCI EFA ETF and a core MSCI emerging markets ETF, and those have been extremely popular. But we think a approach that takes fundamentals into account, that weights the companies based on their actual strength as opposed to their past strength, is important. So there's a few ETFs that have caught our eye. Victory Shares has an international free cash flow ETF. The ticker is GRIN, and it looks at companies.
That's a neat ticker
GRIN.
name.
It's a great way of saying that. It makes you want to smile when
when
you say that. So GRIN looks at the backward-looking historical cash flow, but also on a forward-looking basis, and looks for growth companies that are based international. And it's outperforming the iShares Core MSCI EFA ETF. A couple other ETFs. American Century has a Quality International ETF. The ticker is QINT. That takes quality and growth characteristics and value characteristics together. And that's also outperforming. And then a third one, if I can, it's from Franklin Templeton. It's an International Dividend Booster ETF. The ticker is XIDV. We think dividends are increasingly important. Obviously, the Fed has been cutting interest rates last year. They might continue to cut interest rates. Investors are always looking for income, and they should be looking for it internationally. And we think XIDV is a well-constructed product that came to market about a year ago. We think more investors are going to pay attention to it.
Okay, all right. So that one doesn't have as long of a history for investors to kind of see what the patterns are with this one. I love that GRIN one, GRIN one. I took a look at that to see its performance, and it has had some outperformance year to date compared to the S&P 500. Another thing I know that you're paying attention to is diversification. When you think about ETFs that are either options-based or gold, fixed income wrapper, tell us about the patterns you're seeing there.
Yeah, so it's really seen strong attention in the start of 2026 outside of the U.S. equity space. It's a topic we're going to be talking about at the Exchange Conference that's coming up in 2 weeks in Las Vegas. 1,300 plus people that have registered. We're going to have sessions on options-based strategies. Goldman Sachs made an acquisition of Innovator Capital that's soon to close. We're going to be talking to them. Goldman Sachs has seen a lot of demand for their options-based strategies. GPIX and GPIQ are two of those products. They've seen a lot of demand. We've seen gold be in favor. Gold has been a great alternative for investors. State Street has leading products in that space. That's GLD and GLDM that are the two popular products that are there. We'll be talking about gold on stage. And then fixed income. It's hard to diversify without having a slice of your portfolio in fixed income. And we've seen increasingly investors turn towards actively managed ETFs to get exposure. And we'll be talking to some experts there as well.
So the fixed income is obviously the protection side, right? And protecting against downside risk. You just mentioned the options-based ETFs and the conversations that you're going to be having coming up at your conference. For investors who are concerned about downside risk, obviously there's some risk there. When do they make sense in a portfolio?
So today, tomorrow, the next day forward. If you're concerned with the market volatility that we've seen in the last few days, and I think the market's likely to bounce up based on the jobs numbers you talked about to start the day, but that volatility is still going to be there. And so if you're nervous, downside protection, or even an options overlay that's going to add some additional income with a little bit of downside protection can make a lot of sense. If you're not nervous about the market and this is a buying opportunity for you, then you don't want to protect the downside, you don't want to cap your upside, but there's lots of ETFs to consider for folks regardless of their risk profile.
All right, Todd, we'll leave our conversation there for now. It's great to see you.
Thank you.